So let's hear it. What are your body fat percentages?
Whatever obese is, that's what it was.
Come on, let's hear it.
34.
34%. Mauricio?
I posted it all over social, 29.9 or 29.7 or something like that.
Wow, Mauricio has lower body fat than I don't believe that.
I am shocked. I didn't think I was in shape, but I was legitimately
You didn't think you were in non-Mauricio shape. How about you, Kyle?
I'm not going to lie. I spent the last week trying to put on body fat. I thought like I could really work at it. I could eat like milkshakes and everything every day and stuff. And I ended up, I was still 18. So I got some work to do if I want to win this bet.
Welcome to Drunk Real Estate. Grab a drink and enjoy the show.
Hey there, welcome to episode 87 of Drunk Real Estate. I am Kyle Wilson, Ashley Wilson's husband, and I'm joined with two hosts and an Aston Martin at the moment. Mauricio apparently has got a car picked out. How's it going, buddy?
Are you going to me first?
Yeah, I'm going to you.
Dude, I'm so shocked. Why am I going first?
Well, because you were like flashing on the screen. It just caught my eye.
I really wanted to go with something different, but I've decided to go with your usual Woodford Reserve Double Oak.
Oh, nice. The double
And I got
oak
a
too.
big
Wow.
Check out the look at that thing. Look at that thing.
I like it.
You know, because we're doing the fitness challenge, so I can't like drink wine and calories and sugar. I figured I'd go with some straight up.
Wine is tough, especially if you're doing a red wine. That's a little bit higher caloric. You could do some white wines aren't bad. Apparently, champagne's one of the most bang for your buck, alcohol to calories wise. But that's just what the women tell me. Jay, how's it going, man?
I'm doing well. I'm having a good week. How are you guys doing? I mean, I guess that's the whole point of this. You ask how everybody's doing. I don't ask that question. Okay, I'm doing well.
What are you drinking today?
I need a little pick-me-up today, so I decided to go with just a cup of coffee and some Costco Irish cream liqueur.
Oh, nice. Creamy.
It's like a negative calorie drink there, Jay.
Yeah, I know. Irish cream. There's quite a few calories in that, though.
I have to put on some poundage before we start our little weight loss bet.
We already started.
We already start. Well, I haven't weighed in yet, so
When's your scan? When's it happening? So for the audience, we're all getting DEXA scans. It's Mauricio's thing. He made us all get DEXA scans. He doesn't trust anything else. So the three of us have them. We're just waiting on Jay, ready to go.
I will get mine this week.
Okay.
I need to find a place that does it. I've called like 30 places.
I literally sent you a link to one. AJ, how's it going, man?
Going good. Doing good. Got my DEXA scan, so I'm not doing that good. I'm doing, I'm just going to forget about that and drink my Diet Coke here. And
What were you surprised it was higher than you thought?
Yeah.
So let's hear it. What are your body fat percentages?
Whatever obese is, that's what it was.
Come on, let's hear it.
34.
34%. Mauricio?
I posted it all over social, 29.9 or 29.7 or something like that.
Wow, Mauricio has lower body fat than I don't believe that.
I am shocked. I didn't think I was in shape, but I was legitimately
You didn't think you were in non-Mauricio shape. How about you, Kyle?
I'm not gonna lie. I spent the last week trying to put on body fat. I thought like I could, like really work at it. I could eat like milkshakes and everything every day and stuff. And I ended up, I was still 18. So I got some work to do if I want to win this bet, because I was hoping to be in the 20s somewhere so that I had some wiggle room to get down, because it gets harder the lower you
Jay,
are.
what do you think yours is?
I think I am higher than all three of you.
So like 36 or 37?
I wouldn't be surprised if I'm in the mid-30s.
Hey, can we do a competition? And if for those who guess Jay's body fat percentage can get a free something?
Ooh, that's a good one.
YouTube channel.
Can we put in guesses?
Drop a comment. Whoever's closest to Jay's body fat gets either a mug or a book or something. What do we get?
Well, if AJ's really at 34, I've got to be at 55, 60, maybe.
No,
even.
come on, seriously. Yeah. Right. What are we giving away, Jay? What do you got? What book are you giving away?
Okay, go on to YouTube, leave a comment, guess what my body fat percentage is to one decimal place, and whoever wins will get 2 of my books of their choice and a Drunk Real Estate mug.
Wow.
Wow.
I'm going to put a guess on this too.
Yeah.
And also, while you're at it, you should post what you think the wager should be for our bet. We have something in mind, but we'll see if someone has something better for an idea. So AJ, what are you drinking now that we know that we're trying to lose weight? Are you still going with the Diet Coke? I guess it is Diet.
Oh,
yeah.
Yep. Diet Coke.
That's fair. You're going to see a lot of this over the next 3 months because I'm looking for something that's low carbs, low sugar.
Oh, boy. No,
So I found something that's no carbs, no sugar, and only 99 calories. This
and
is
no
this,
taste. And no
this
taste.
drink called Clear. So you can see it right on there. 99 calories, no carbs, no sugar. So I'm gonna be crushing that a lot for the next couple
All
months.
right, let's get on with the show, Kyle. Come on.
Well, yeah, because economic updates are coming in hot these days. Luckily, we have our economic update expert with us. And to that point, we were changing the subject of the economic update up to this morning of the podcast. Well, today, which we're recording Tuesday, I feel like I have to point out because things could change by Thursday. Not only that, Trump tonight is doing his State of the Union kind of thing. I don't know if it's official, but kind of a State of the Union. And as we discussed earlier, tariffs, quite a few times we've discussed, those tariffs on Canada and Mexico went back into effect this morning. So why don't we just start talking about that? We got some other stuff to talk about. But Jay, I thought these were just going away, man. That's what you were telling us. What gives?
I'm telling you, I'm a little surprised that he followed through on the tariffs, but I'm going to stick with even if he follows through, which he did, we're talking 24, 48 hours max. I
Doubling down, huh? Well, there's already reports
I don't think this is a long-term thing. I don't think
They've already announced that he's going to scale back.
Yeah, he's announced that tomorrow he might scale back on Canada and Mexico. I expect that that's going to happen because, like I've said from the beginning, I just don't see long-term tariffs in the cards.
Well, I feel like I have to step up as a Canadian because I don't know if you saw the Canadian response, but it's kind of funny because we have Trudeau, first of all, and to put in perspective, Trudeau's basically done. He's days
Like a
away
lame
from
duck. He's
being
like a
editor.
lame duck prime minister, isn't he?
Right. And so his give a shit meter is like super low about like sounding like professional, and yet he's still so Canadian the way he like I don't know if you watched his press conference. He's still so Canadian and so nice about it. And I'm saying to myself, dude, you're like a week from now you're gone. Like you have nothing to worry about. And he's still so nice about it. But my favorite one was
but we're not like that mad, but we are mad, but we still like forgive.
But don't worry, Americans, we love you.
Don't worry, we love you. But we are mad.
Yeah, I'm speaking directly to Donald. Donald, you're very smart, but this is very dumb. Like he was so polite about it.
I personally appreciate the diplomacy. I couldn't do it myself. I'd be spiteful and angry. Obviously, you've heard me.
I do want to talk about the Ontario premier though, because
Yes, I love because he's not nice. He's not being nice or diplomatic at all. So let's talk about that.
So you guys haven't lived through this. I'm from Ontario, and so this guy's whole family has been in politics, by the way, and his brother. I'm gonna put this politely because his brother actually passed away, but his brother was originally had his job. So his brother Rob, this is Doug for his brother Rob had his job, but the guy was a partier, like drugs, alcohol, and like he literally died because of it because he partied too hard. And like this whole family has kind of a reputation of being kind of like a little bit like wild cards. And so when you have Trump, who's an obvious wild card at this point, and then you have this Ontario premier who I guess because we have like a lame duck prime minister, like he's like emboldened to kind of do what he wants. He basically pointed out that, hey, look, there are 3 states that get all of their electricity from us. Like we are a border state right now. A lot of our economy depends on like US trade. Cause like if you live where I do, like stuff just goes back and forth across the border. Building a car, it'll go back and forth across the border 8 times before it's built. And so like it really screws Ontario as a province. He's like, if you're going to mess with us, if you push me too hard, I'm going to shut off the electricity to those states. And he's like, don't play with me. So like, it's one of those things where it's fine for us to say like, what are the effects of the country as a whole? But let's take a look at like some of these border states and their reliance on the Canadian economy for like the reciprocation between those two. Like there's going to be some states who are hurting bad if this goes longer than like 8 days. I think they predicted 8 days. Like the entire car economy down there is just going to be done. They're going to have to shut it down. So
And the whiskey.
I
Don't
hope
forget
Jay's
the whiskey
right.
trade. Don't forget the whiskey trade, Kyle.
Yeah, well, that's the big thing. Like the big FU that the Canadians are doing is like, we're going to stop. Like they have like all over the news. They have like people taking the American whiskeys off of the shelves so no one can buy them anymore. It's like a big like thing. Canada's got its problems, but I do love how they handle things.
So, Jay, I have a question for you though. Jay, are you a little thrown off?
I'm sorry. I think this is a better question for Kyle. He's leading this one.
That's what I was going to say. I was going to say that exact same thing, Jay. I mean, how are you feeling about this idea that you haven't not been able to do your TED Talk yet on this topic, and everybody else has been jumping in before that?
It's okay. I'm enjoying. I can't wait to hear where Kyle goes next with this.
Well, Jay, in my defense, on the agenda had nothing about Canada's reaction, and so I felt like as a Canadian I could step in. But why don't you give us a summary of what's happened, what the retaliations are, what the effects have been over the last 24 hours?
Do you have a PowerPoint, Jay?
He'll mute us, Mauricio. Let's go through.
I don't care about Canada. Canada is just another minor U.S. state pretty soon. So let's
Northern Montana.
Wow.
So I want to start with the one that actually matters a little more, and I'm sort of serious here. I want to start with China, simply because China is the one country that we have had tariffs on. Well, we've had tariffs on China since Trump's first term. He put tariffs on, and Biden kept them on. Biden actually increased them in some cases, and Trump increased them again about a month ago, and then he increased them again yesterday. So we went from 10% tariffs on most of China's imports last month to Monday. Monday at midnight, Tuesday, increased that to 20%. So as of right now, as we're taping this on Tuesday evening, tariffs against China are at 20%. Additionally, there was, I don't know who it was a Democrat senator woman who is now trying to pass a bill to get rid of the de minimis clause, which we talked about last week, which is that clause that says that when China sends something into the U.S., or when we buy something from China under $800, it gets delivered in the U.S. duty-free, basically no charge to us as citizens. And she's trying to get rid of that, which is going to make all the cheap crap we buy off of Temu and those other websites a lot more expensive. So anyway, China wasn't very happy with this, obviously doubling their tariffs. And so they've done a few things in retaliation. One, they put 15% tariffs on like 700 obscure products, chicken feet and other stuff. But then they put 10% tariffs on some important stuff. They put 10% tariffs on soybeans, pork, beef, seafood, fruits, veggies, dairy, like all the important
You did say
stuff.
chicken feed with a D, right? Not chicken feet?
I said chicken feet.
Oh,
The 15% tariff was on chicken feet.
Okay. You have to specify with China. They got some weird over there.
Yeah.
Apparently they
no,
eat that.
that's stuff they're importing from the U.S. Actually, is the tariff. Okay, so but as you can see here, 10% on all of those foodstuffs. That's basically targeting our farmers, and they did the same thing in Trump's first term, and they were successful at it. We've thrown a lot of subsidy. The U.S. government's thrown a lot of subsidy at farmers. They're doing it again, throwing a lot of subsidy at farmers. Trump put something on social media the other day, basically warning that, hey, this could be tough for farmers. And honestly, they're probably going to take the brunt of it from both China and Mexico. Additionally, China said they're going to suspend the import of U.S. lumber. They put a bunch of U.S. firms, specifically engineering and defense firms, on their quote-unquote unreliable list, which means those firms can't do business in China. And the biggest thing, and I think, well, not the biggest thing, but you mentioned one of the big risks is simply that no, I'm sorry. Lost my train of thought. One of the big risks is simply that if this lasts too long, China's going to start looking for diversification in their imports. So specifically, a lot of the agricultural stuff that I mentioned earlier, the soybeans, pork, veggies, that they've been buying from the US. Over the last month, they've started diversifying by buying in other countries, specifically Brazil and Argentina. And so they're looking for other suppliers. And if this lasts too long, if this gets too big, they may find other suppliers that they like, and that could end up meaning that it's going to be bad for U.S. farmers and other business owners, not just in the short term while we have these tariffs, but even when those tariffs get lifted.
China just announced, it's actually breaking news. They've announced, based upon the tariffs, their GDP is set now. It literally just came out, 5%, which is the lowest in over 2 decades. And it's in direct reflection of the tariffs. They're reducing their GDP projections. And their deficit is rising to the highest level ever.
Yeah, China is not going to be in a good position here. None of the countries we're doing this to are going to be in a good position here. So it's really just a question.
But China's an adversary, though. So to me, it makes sense.
Well, so I think we have to be careful there. China might be a political adversary. They're not an economic adversary. Historically, they've actually been a very good trading partner, and we've relied on, ridiculous hundreds of billions of dollars a year in imports from Canada. Most of the stuff, from China. Most of the stuff that you have sitting on your desk, you walk into a Target, you walk into a Walmart. All that stuff's coming from China. I don't think we should be thinking of them as an adversary from an economic standpoint. And so, and I think we're starting to muddy the waters.
You can't really separate the two, though. Like you kind of have to take them together.
If they're going against the currency, if they're saying, hey, we're going to support the currency, which, by the way, the whole BRICS thing, but anyways, I think it's set up that way. And two, I think modern day adversaries, we fight economically. That's what we do. We don't, like a political adversary is fought economically. And I think the days of giving China a special deal and like us having a trade imbalance, I don't think that's necessarily a bad thing to at least match with China. Now, Canada, Mexico, no, NAFTA, we should have open borders, open trade. That is, it's once again, you're talking about Southern Arizona and Northern Montana. But, when it comes to China, I think having a little more proactive, at least to keep things what I would consider even. I don't know how terrible.
We just don't want to get it out too far out of whack where they have too much power, right? When you talk about like the fact that we use economic warfare kind of these days, sanctions and things like that, like you want to be able to have effect. Like you can't have them have too much power so that like you don't have those tools in your chest anymore. And for someone who's quote unquote an adversary, you need to even that playing field a little bit.
I don't really understand that whole idea of we have to even out trade. A trade imbalance isn't inherently bad. I have a trade imbalance with my dentist. I give my dentist lots of money. My dentist has never given me money. But the benefit is I don't have to go to dental school. I don't have to.
Yeah, I don't think. Correct me if I'm wrong, AJ. I don't think we're talking about like just the imbalance of like imports exports. It's kind of just more their ability to influence us.
But for us to have 10% tariffs and them to have 30% tariffs, that's where I think the balance got out of whack. And so I'm okay to say if you're imposing 25% tariffs, we'll impose 25% tariffs. I think right now it's 21 and 25, but I think that's okay. I don't know.
I also think one of the biggest problems too, like we saw it with COVID, is like there's certain industries and certain products that we are too reliant on somebody who we consider an adversary. Like that's why I don't get the whole Canada thing. Like it's fine to rely on your best friend. Like Canada is literally the U.S.'s best friend.
But before this trade war started 6 weeks ago, what do you think the tariff that China had across the board against the U.S.?
25%, and ours was 21.
2.7%.
I was going to say 3.2 because that's the average.
2.2, yeah.
2.7%. And so we retaliate with 10% and now 20% tariffs. So it's not like China was taking advantage of us and making tons of money off of us. And that 2.7, I don't know what we were before. I know we weren't at zero because we were tariffing a lot of their stuff as well.
Don't get me wrong. I'm not saying.
Hold on. In 2024, they were 21% and we were 19.
The statutory tariff rate that China has, which is the flat against all the products. There may have been some other products that were higher, targeted tariffs. And we do the targeted tariffs too. I'm just talking about the statutory across the board tariffs, and that was a 2.7% rate before this year.
Which I like targeted tariffs. I don't have a problem with. Like we need to strategically align ourselves. Like as I was starting to say with COVID, like with COVID, we saw the supply chain with producing and medicine. Like we are too reliant on China for certain medicines. Like we saw shortages, and we were relying on China to fill up those shortages. So something like that, like when it's out of whack, to me, that's when we, implement tariffs and we strategically do those things. And I don't see that as being a bad thing.
No. And we've talked about this. There are things that have national security implications. There are things that have health and well-being implications. And those things we certainly should be making an effort to manufacture here in the United States, even if it costs more, even if the government has to give subsidies to do that. Because again, national security, good of the health of the people. But when we're talking about getting like pens, like there's no inherent benefit for us to manufacture pens in the U.S. versus importing pens from China if we can get them cheaper from China. And so I don't see the benefit here of trying to win a war that doesn't have to be a war.
The Peterson Institute has the average when you take the high ones to the low ones out at 21% for China. So the Peterson Institute for International Economics, which is highly regarded, that's what they have. I don't know.
I mean, the main issue I think that I have with the whole tariff thing is there's tariffs that are imposed because of, like you said, maybe they're doing tariffs, we're doing tariffs, and so there's a level playing field. But to me, it seems clear that the tariffs are being used as a bargaining chip for other stuff, like completely unrelated to the economy, right? So
wait, Mauricio, you don't believe that the whole reason that Canada is getting tariffed is because of their lack of fentanyl policing?
Again, I don't usually think about Canada very much, and so I am thinking more of China. I'm thinking of China, and I'm thinking of I'm thinking of Taiwan. I'm thinking about the semiconductors. I'm thinking of all these little things that not little things, but that Trump wants to get from China, and he's just using this as a bargaining chip. And that's
they just announced 3 new. You mentioned Taiwan, like the chips. What was it yesterday or the day before? They announced 2 new $165 billion in new plants. So they're continuing.
Taiwan's actually investing in U.S. chips. It was an interesting turn of events. But that's a good stepping off point to like investing.
And by the way, Taiwan's been investing in the U.S. for a couple of years. They agreed to invest $65 billion with the CHIPS Act a couple of years ago. They increased it another $100 billion. So
of the effect of these tariffs? We're making assumptions, obviously. Mauricio's assuming that there's an end game to this, that it's not just tariffs. But as investors, how should we be reacting to this? Like, do we react to the fact that we think, okay, all of these things are just going to make higher prices? Like for us in construction, we're going to have to be paying more in construction. Do we just react like that? Or do we think there's an opportunistic view of this, that there's somewhere we could be putting our money in taking advantage of it?
I think the opportunistic view is simply that tariffs, along with many other things, are inflationary in general. So the question, if that is your baseline case, that we're going to have inflation over the next decade because of tariffs and other things that are going on, that's your tailwind, then that's what your strategy would be based on. And if that's the case, then I would think that owning hard assets, real assets that protect you against inflation, including real estate, including precious metals. That's one of the reasons gold is almost at record highs, is because people are like, hey, inflation's coming. Inflation expectation is through the roof. So your investment thesis should align with that if you believe that tariffs, are going to stick around for a while and cause.
We could do the stagflation thing too, though, instead of just inflation. Like that's a big word that's getting thrown around right now.
And I think the only problem I have with inflation is not even. So like I view a much more targeted approach when you're dealing with tariffs and inflation, because the effect is wildly different. And I think that as an investor, you have to really look at what changes. So first of all, tariffs, obviously you have the inflationary effect on those products and services. But then you also have the change in literally the way the economy works within those industries. And this was something our firm took a big approach on. So we did a $40 billion development starting 3 years ago, literally on the infrastructure off the chips manufacturers in Arizona, right where they were building and did the whatever it was, $80 billion one, which they just announced 2 more at $163 billion down there. And it's a totally different way of looking at what areas of the United States are going to build out what industries, and then what other ones are going to die. Like literally what cities next to Canada and what industries and cars are going to go away. And if you're owning real estate in those markets, because we have a 25% tariff on Canada, you have a market that had a huge concentration of whatever service product or what that was on the border.
Yeah, Detroit would be gone.
Yeah.
Detroit would go back to the days when they were gone.
Like it can be very, very like, so I think you need to really look at it very strategically and say, what effect will this have on individual industries and also locations? And we've seen this as industries move, like you mentioned Detroit, as that went offshore, it killed, right? So as we've had whole cities and communities, as we've moved products and stuff offshore because it's cheaper, that's like a whole story of 30% of the United States. Towns and cities literally just died as that moved away. It's the economic impact's huge.
But will we get steel towns back, right? Like, because that's one of the, he seems to be targeting metals like steel and aluminum and things like that and trying to bring that back. Like, should we be looking at Pittsburgh? I know I'm just throwing that out because it's, technically called the steel town. I don't know how much of the industry there is still steel, but like, should we be looking there? Or like, is that something that we should be looking the other side of it? Like he's trying to bring certain industries back on shore. Should we be looking at those ones too?
I think if you I think so. I mean, we were doing it with the chips. So, yeah.
I disagree. I'm a fan of free trade. I'm a fan of capitalism. I'm a fan of the government not choosing winners and losers. And except with obviously, and I already told you my exceptions: national security, health of our people. But other than that, I mean,
we're all fans of it, Jay, but we still got to deal with it.
Yeah, what are you disagreeing with? We're talking about where to invest.
Oh, I'm talking about whether I think that we should even be bringing manufacturing back. I mean, the reality is, unless you think Trump is going to run for a third term, there's a reasonable chance that whoever comes in next is not going to have tariffs. And I suspect a lot of these companies that are saying they're going to onshore are never going to do it. I mean, you guys, everybody remembers Foxconn. Foxconn was going to spend billions of dollars in Michigan to build factories during Trump's first term. And the minute that Trump turned his head, they were like, never mind. And I think we're going to see a lot of that here. I think we're going to see a lot of companies that are going to say, yeah, we're coming in, we're going to build. But the reality is they're just waiting it out, and they're not really going to start those investments. And at the end of the day, I'm hopeful that capitalism wins. I'm hopeful that if it's cheaper to buy stuff and import it than it is to build it here, that we still have the ability to do that without getting taxed to the point where we can't do that. And so that's a separate question of where do we put our money. But personally, we talked about this last week. I think the economy is going down the tubes. And I think being in cash right now is probably a good place to be.
Well, are you basing that off of the GDP numbers? Because I'm hearing mixed reviews on this. Like all through the news, we had that the GDP now all of a sudden just tanked in one day. It went down, from 2.5% down to negative 1.5%. Then it went even lower. But then a lot of people are like kind of walking that back and saying, oh, the first quarter is always the slowest one. And people were just front running tariffs. It was basically what they did. They knew the tariffs were coming, so they stocked up on their inventories. And so now they're going through their inventories that they already stocked up because they knew tariffs were coming. So is that kind of where you're basing this? The recession is here, or is
no? We talked about this last week before GDP Now even predicted negative growth in the first quarter. If anything, I think they just listened to our podcast and revised their numbers based on what I said. But But seriously, no, I was saying this a week ago before those numbers came out, and we can dig into those numbers. It's not like it's some black box where you can't see the numbers. So what Kyle's talking about, for anybody that's not familiar, the Atlanta Fed has this model, this initiative that they do where they track GDP in real time based on publicly released data. They take all the data that's coming in for the quarter, they put it into their model, and they say, this is where we're tracking for the quarter. Now, we're 2 months into this quarter, January, February. We have an entire month of March left. So anything can happen the last month of the quarter. But the reality is, for the first 2 months of the quarter, what we're seeing is that GDP forecast has dropped from about 3% a week and a half ago to now negative 2.8%. And the big drivers of that are, number one, the trade imbalance. So we saw a huge negative trade balance in January. Basically, anytime you export something, that's good. That helps our GDP. That's money that's coming into to our businesses. Every time you import something, that's negative. That takes away from GDP because that's money going out. And we saw the largest negative trade balance in any month in history last month. And so that definitely contributed to this drop in GDP. But other things that contributed, we got the ISM manufacturing survey back on Friday. That basically showed that manufacturing is now in a recession. We saw personal spending as part of PCE dropped considerably. We saw that business investment has gone down. Both capital investment, real estate investment, and non-real estate investment have all gone down. So we're starting to see, and we saw retail spending has gone down the last 2 months a big amount as well. So, I mean, even in addition to the fact that we're seeing this large trade imbalance, which impacts GDP negatively, we're seeing a whole lot of other things that are negatively impacting GDP. And I don't know if we're going to have a negative number in Q1 or a positive number in Q1, but the reality is the data for January and February was absolutely horrendous. And I don't care if it's positive or negative. The point is things are not looking good, regardless of whether we're 1% or negative 1% or 5% or negative 5%. The data just doesn't look good, regardless of that GDP number.
And I can, by the way, I have tracked the Atlanta Fed numbers in the past, and they are usually paint a much rosier picture early on. So usually whatever number they came up with at the beginning ends up being not even close. Like they'll start with like, oh, we're going to grow by 3%. And then, oh, it's 2%. Oh, it's 1.5%. And it always goes down. So the fact that they're already at almost 3% negative here in the beginning of March tells me you're probably going to look at something in the 3.5.
From what I understand, though, that first quarter, though, is always the one that kind of does that, where it's like coming out of the holiday season. And
but not that, yes, understood, but not to the extent of 3.5 to 4%.
Not contraction.
Yeah, not contraction. Or if it's a contraction, it's a minor, like really minor. Jay, I don't know if you saw this, but being one of for all you gold bugs out there, right? Who probably, if you're a gold bug, and you follow that, you've seen that it's still almost at an all-time high, almost touching $3,000 an ounce. Goldman Sachs came out with a report. I don't know if you saw this, Jay, or not, that said that they pointed out that since November 2024, Goldman says the main reason for the widening trade deficit has been the increasing gold imports in January, which I thought was interesting. Now, I believe gold prices are going up because central banks are buying gold like there's no tomorrow. If you look at the central bank buying, but interesting take there that even the retail investors are piling up on gold. Obviously, gold has been going up, so there's been demand for gold, but that's contributing to some extent to the trade imbalance because so much gold is being imported.
There's actually another interesting piece of data that goes along with that. So apparently back in February, there was a time gold is somewhat inefficient in certain markets. Gold, the spot price of gold, so the price that you can sell or buy gold, was about $25 higher per ounce here in the US than it was overseas in Europe. And so literally people were putting gold into suitcases, taking them on airplanes, flying them to the US and selling their European gold in the US.
Weren't banks doing that? Banks were just loading up planes.
Yeah, that's called a clue because that's the market telling you that they're not too sure that you can actually deliver on those contracts because obviously the contract they're just contracts. Hey, I promise to pay you this much money, or I promise to deliver X amount of gold for this much money. They're just contracts, and so that does happen over time where the market just has skepticism about whether they can actually deliver on that. And you get those not divergence, but the closeness between because usually the contract price is usually higher than the spot, right? Or one of the other, yeah, the contract price is higher than spot, but sometimes it gets really, that gap gets really narrow. And to your point, sometimes it reverses. And that just tells you people they want the gold. They want the physical gold. They don't want paper gold. They want real gold.
Okay, let me real quick, because we talked about China. Kyle talked about Canada. There was also 25% tariffs put on Mexico on Monday night, Tuesday morning. Mexico hasn't announced any retaliation at this point. They basically say they're giving it till Sunday. They're going to go make some public announcement of how they're going to retaliate. If they haven't worked out a deal before then, I suspect they will. So Mexico is the one country that hasn't announced any retaliatory measures. And interestingly, unlike the last time we had tariffs, it doesn't appear that there are currently any demands from the president for how to have those tariffs removed. I mean, we didn't get any demands for China last time, but we did for Mexico and Canada. This time, as of now, we're going on 24 hours since the tariffs were implemented. We don't yet have any demands for relinquishing or releasing those tariffs.
Well, it'll be an interesting few days. Hopefully, by the next time we get this podcast, Canada at least will be off the list.
Yeah, nobody gives a rat's ass about Canada, Kyle. Come on.
I'm going to go on the record and say that I think by the time this releases on Thursday morning, given that we've seen a 3% drop in the stock market and a lot of other negative news, I think this will be in our rearview mirror, and we may still be talking about threats of tariffs, but the current round will be off for at least Canada and Mexico.
Well, does Trump care more about the stock market or the 10-year Treasury? Because 10-year Treasury has been coming down because of all these things.
We could have a really long discussion about that, but I don't think we have time here.
Maybe next week.
Yeah, I think based upon the announcements, it may be off as early as tomorrow morning. So the announcements coming out are just saying that they're already, by tomorrow, we should have announcement. So by the time you're listening to this may be already old news, and that may have already been called off.
And we may read. You know what we should be thinking about doing is reformatting the podcast. We should just be going live. We should just be going live so that whenever we talk about, because literally things change in like 24, 40 hours.
I was thinking that at one point during this podcast, AJ was like, well, this is kind of breaking news. And I'm thinking to myself, well, podcast is coming out 2 days from now. It's not going to be
breaking news. Trump
anymore.
just announced in his State of the Union address that he will be tripling.
That's true. We're doing
this
it
is
like
going to come out where they're going to be like, we already own China. Like, what's going on? What are you
Canada's already a
bought
51st state.
All right. Well, we got to move on because Mauricio has the most exciting topic that we've ever had on this podcast. We talked about it before, and if you listened last week, it was one of the most interesting topics I've ever heard. I was so excited for it. It was going to be awesome. But seriously, I think this update is one that everyone has been waiting for, especially Jay, who's been a little bit of a procrastinator. So we're talking about CTA again. And Mauricio, what's the big news here?
The big news is that, as I predicted back in November, the Corporate Transparency Act has officially been killed by basically the Trump administration. The Treasury Department came out on Sunday, actually. So just this weekend, and said, hey, you know what? All these court cases going on back and forth, all this congressional trying to pass bills to extend the deadline. You know what? We're not even going to enforce this thing. Like, we don't believe this is in the best interest of small businesses. Screw this. Basically, that's what they did. Screw this. We are not going to be enforcing this. So everything you've been hearing before has been usually at the court levels, right? The courts have been going back and forth. Is it on? Is it off? Is it on? Is it off? Congress got in, passed a law that said, or a bill anyway, that said, hey, let's extend the deadline until January 1st so that we can let the courts play out. Trump administration comes in, the Treasury Department specifically, and says, forget it, we're not even going to be doing it. This literally, I did a post on this over the weekend on Saturday, I think it was, because FinCEN, which is underneath the Treasury Department, FinCEN had come out and said, hey, we're pausing the March 21st date because we're going to be revamping the rules. We're going to change the rules a little bit. The regulations are going to change to make it easier for some sort of the less, some of these companies that are less at risk. We're going to change the rules, and we'll come up with the rules out in March 21st, and then we'll give you the deadline for whenever that is. And as we've talked about before, even Congress, as we speak, the Senate has a bill to extend the deadline. So all of this stuff going on, and the government comes out and says, hey, we're not going to enforce it. Keep in mind, now, this is originally what I was going to talk about today, and I still want to mention it because it's interesting for me, and maybe it's interesting for the listeners, but all of the back and forth that's been happening over the past, months and months and months has nothing to do with the merits of the case, right? The reason we've been going back and forth is because the appellate courts have basically been trying to pause this nationwide, right? So there's a court case in Texas and some district court in the middle of Texas, right? Eastern District of Texas, whatever. And then the judge, instead of just putting a pause on the specific plaintiffs, like, hey, you can't enforce the Corporate Transparency Act on these particular plaintiffs that are here in this case, they come out with a rule and say, this is going to be nationwide. Right. And so then the Supreme Court comes in, doesn't say that the Corporate Transparency Act is constitutional or not constitutional. All they're saying is like, hey, judge, it's cool that you did an injunction. It's cool that you want to pause this, but you don't have the power to pause it for the entire country. Like, this is just a case in your little district in Texas or wherever it is. You don't have the power to do this at a nationwide basis. So that's what the Supreme Court is basically knocking back down, and these appellate courts are knocking back down to the lower levels so that can actually come up with the merits of the case. That never happened. I'll be interested to find out, which now that I think about it, I'm not even sure. I presume the court cases are going to continue. I don't know why, just because there's an announcement or a press release from the government that says we're not going to enforce it. I think from a legal standpoint, they still might be, running its course unless the Department of Justice just says, hey, screw it, we're going to pull the lawyers and we're not going to file anything. But the bottom line is, the net is the Treasury Department under President Trump has said no more, we're not going to enforce it. Technically, this is a congressional act. Congress is the one that passes law. So technically, Congress could sue the president, could sue the administration to ensure that they do enforce this. I just think that's very, very unlikely given the makeup of the current Congress. But that's usually what the remedy would be. I just don't see it.
I just have one question, Mauricio. As my legal counsel, I have this business partner, and for the last 2 weeks, she has just been hounding me to get these CTA filings done, like emails every couple days. I think Kyle's gotten the same ones, and I've just been ignoring them. At this point, can I go back to my business partner and say, legal counsel has told me it is okay not to be filing right now?
I think it's fine for you to go tell whatever this partner of yours is that, hey, I told you so. I didn't. In fact, my counsel's been telling me since last year that this is really never probably going to happen, and that we don't have to officially file this, and it's going to. I just don't see it coming back. So yes, I think you're good. And Kyle, you can finally start, plugging your wife again, because now she'll be talking to you.
Well, it pays to procrastinate is what you're saying. So I'm not even mad. I did do a bunch of work on on my personal entities to get this in, not our business ones, because I have a business partner who procrastinated and paid off. But I'm not even mad, because I thought this was super dumb, this whole thing. Like, it was just a dumb rule.
Just imagine the amount of waste, the amount of lawyer bills, and even all these entity formation companies that have been charging people money. I mean, people have spent real money on this, and time, maybe more importantly, time, and just the amount of time. I've even just been talking about this on podcasts and on this
basically
show.
A clerical thing. Like, they could figure out all this information if all the agencies and just started talking to each other, but they don't know. They put the onus on us.
Syndications to file these things
News is, unless some other crazy development comes where some congresswoman, congressman, senator comes out and says, "Hey, this is outrageous. We are going to bring a lawsuit in federal court and compel unless something like that happens, I think we're done with the Corporate Transparency Act. And trust me, nobody's happier than that than me.
Awesome. Okay, great update. As I said, super exciting. We all loved it. It was the most exciting subject we could possibly talk about.
That was such a good job. I think we should give Mauricio another one.
Yeah, why don't we talk about something else for Mauricio? Because as an immigrant, we are now apparently in a couple weeks, they're just telling any immigrant that they could come in. They could come in and get citizenship if you could afford it. That's the only caveat. There's a new proposal that would allow immigrants to buy American citizenship for a lofty sum of $5 million. And it's said that this program will bring jobs into the country. It'll help pay down our debt. So, Mauricio, this seems like a no-brainer, win-win for everybody. Why is there any controversy?
Yeah, I don't know about the controversy. The only reason I agree to talk about this, and because it does have a relationship to real estate, and specifically to my world of the syndication capital raiser. So there is an angle to this that I wanted to address. But let's just start with the quick facts, and then I'll talk about what I really wanted to talk about, which was kind of like my little thing. So yes, President Trump came out with this announcement that said, "Hey, why not we are going to allow foreign rich people, wealthy individuals who want to become citizens," meaning you start with a green card, right? You start with a residence. And so let's give these folks a green card in exchange for a $5 million investment, right? There's a lot of countries that have these citizenship things. I used to live in Belize, and there's a bunch of countries where you can make an investment in the country, or you can just make a donation sometimes. And in exchange for that donation, you get citizenship. It's economic citizenship that you can get. Yeah, a lot of these countries have that. And so President Trump said, "Hey, we want to, there's some fraud going on what I really want to talk about, but hey, let's set up a situation where you can bring in these wealthy individuals. They'll come to the United States. They'll make the investment," which I don't think the investment obviously will add up to something, but in the grand scheme of things, $5 million times however many people do this, it's not going to make a huge dent in whatever our issues is. But the idea is that you would get wealthy individuals here in the United States. They're doing business in the United States. They create businesses in the United States. They create jobs in the United States. And generally, it will generate economic activity. That's kind of the idea behind it. My issue with it, or the first thing I immediately go to, because I do deal with this situation, and it's part of my practice, or when I deal with syndicators, is that we already have a similar program in place. And it's called the EB-5 program, where it's actually interesting because I'm getting a lot more calls in the last 6 months than I did in the last 6 years. But there's already a program out there where if you're a wealthy individual or you're an investor, which is why my clients love it, if you invest, it used to be 500 grand. Now it's gone up to anywhere between 800 grand and just over $1 million. But if you invest, let's say $800,000 or $1 million into a project in the United States, could be a business, could be real estate, that actually creates jobs, that creates a minimum of 10, either creates or maintains a minimum of 10 full-time jobs, then in specific areas, it's almost like the opportunity zones, but it's like in specific areas that they've designated. If you make that investment, hey, wealthy individual from China, for example, you make $1 million investment into this project that qualifies, we will then give you a green card in exchange for that investment. So this EB-5 program not only has been in existence for many, many years, ever since I even remember practicing, they actually recently Congress actually updated the rules because for some reason I've just been getting a lot of calls about EB-5 programs in the last 6 months. Because again, if you think about somebody who's doing like AJ, you're doing a big self-storage deal, you need to raise $10 million and it's in the right areas, you're clearly going to create a bunch of jobs. You can get a Chinese investor to come in and put in $1 million into your project and they can get a green card. They don't actually give a crap about what their return on the investment is. They just want to make sure you don't lose their money. So I put $1 million into AJ's deal or $1 million into Kyle and Jay's deal. And in exchange for that, as long as I don't lose money, I get a green card. They're probably even happy losing a little bit of money. Hey, if I lose 10 or 20%, who cares? I get a green card. It's like my backdoor way into the United States. Now, so there already is that in existence. So with the gold card, what they're basically doing is upping the number from, let's call it about $1 million to $5 million. But they're taking away, look, there's very little detail about this, but the idea is they're taking away the requirement to have to actually make an investment in a particular area, create jobs or whatever. The idea is simply, hey, bring in these wealthy individuals in the United States, they will do it. What's interesting here is that, and I haven't talked to any of these guys, I just read it in the media, but remember that the United States is a very unique position in the entire world, and it's not a good one. And that is that if you are a U.S. citizen or a U.S. resident, I guess for that matter, you get actually U.S. citizens, you get taxed on worldwide income. It's one of the few, I think it used to be the U.S. and I think Israel. I don't know if Israel still has that. So we may, if we're not the only country in the world, we're one of 2 or 3 countries in the world that tax its citizens on worldwide income. So think about one of these.
Mauricio, I'll take it one step further. Like as a Canadian citizen, I had to relinquish my Canadian citizenship to become American. So as far as America's concerned, I'm no longer a Canadian citizen. Now Canada doesn't recognize it, so like I technically.
And so if you had a bunch of businesses in Canada, for example, that were generating income, right, and or actually that's not a good example. Let's say you were in Canada and you had a bunch of businesses overseas and you were generating income. Canada would not tax you on that international income, but the minute you became a U.S. citizen, they would tax you on income that you had in any other country in the world. And so a lot of these wealthy individuals, people are targeting, hey, look, it's going to be these Russian oligarchs or these Chinese. They have investments worldwide. There's not a huge incentive for them to become a US citizen and suddenly get opened up to worldwide income, which is why President Trump, as part of this gold card, included that provision that, hey, if you become a citizen or really a green card through this process, you would be exempt from this worldwide income. That's a big piece of it. People still don't believe him. And so they're like, yeah, that's great. I'm going to become a US citizen. I'm going to be exempt for like 5 minutes and then they're going to change the law and I'm going to have to pay taxes.
And let me ask you a question. Does that seem, as an American citizen, somebody who has contributed to this country for 50 some years of my life, does it seem fair that somebody else can come in and by paying a whole bunch of money, like be exempt from something that I'm not exempt from? Yes.
I in theory I don't have a problem with it if it benefits us economically, and that's a big if. But if you suddenly get, like the EB-5 program caps you at 10,000 individuals. Let's say you got 10,000 wealthy individuals to come into the United States, pay us $5 million. I mean, it's not nothing, but 5 million times 10,000 is not going to make a huge dent in anything. But if you get those 10,000 people in the United States and they start businesses and start doing and bringing in capital and it helps the economy as a whole, I don't have a problem with it.
I start businesses. I raise capital. I help the economy as a whole. I mean, it just seems a bit unfair that somebody else can buy something that me, as an American citizen, can't have.
Let's be honest. Like, I looked at that and I feel like that was people who aren't super rich coming up with issues of why this gold card wouldn't work, and that Trump having to answer that. Because let's be honest, like, if people who have that kind of money don't want to pay taxes on certain businesses outside of the US, they wouldn't pay taxes. They'd figure it out. We already know that super rich people figure out how to not pay taxes. It's not an issue.
Think about somebody who's got $100 million or is a billionaire let's assume they do come to the United States. They're going to be buying houses. They're going to be buying yachts. They're going to be buying they're going to be buying real estate. They're going to be buying, Louis Vuitton, whatever. They're going to go to the malls. They're going to be spurring, just that one individual is going to be spurring a pretty big economic little thing.
But to your point, Mauricio, why does it have to replace the EB-5?
When's the last time you paid federal taxes?
I will at some point.
And when was the last time you had international
holdings? I haven't paid federal taxes in over like 15 years.
I know. And so I guess it's not fair what I'm doing either. Well, no, fair enough, AJ. Good point. Okay.
The point that what Mauricio is saying, though, is yes, they don't have to pay taxes on the stuff they've already done. But if they're going to, but if that person who's been starting businesses all over the world, like if he all of a sudden his next business, he starts it in the US now because now he's a citizen and he's got his set up, or he or she sets it up in the US now, like that's good for us. So I mean, I guess I don't see a problem with it, but to Mauricio's point, I don't see why we have to kill the EB-5. Like, why does it have to replace it? Why can't we have multiple programs for path to citizenships? I've always said, like, there should be more clear-cut ways to become a US citizen, and more people would do it legally and properly. So I don't see why we have to kill the EB-5 in order to replace it for this one. Just make it a separate path.
My wonder was, at first I was like really afraid it would hurt so I originally was like, okay, this will kill the real estate market. And the more that I looked into it, the more I actually changed my opinion wildly. In fact, I want it to end. So it represents like 2% of the home market in the United States, roughly, that people are buying home and everything else. But the more I got thinking about it, the more I really started to think about what we talked about earlier, was that incentives. And I worked a lot with Tech Caminco. Kyle, do you know Tech Caminco? They're huge. They're like one of the biggest mining companies in the world. They're based out of Canada. So they're in Vancouver, BC, right? Well, Vancouver's housing issue is insane, right? And when we were working with them, because we did a lot of consulting with them through a whole bunch of those, doesn't matter. But the housing crisis that is going on up there and the unaffordability is largely driven because of the incentives for people, primarily from China, to buy real estate and get citizenship. And so that was really driving up home prices. And a lot of them were non-occupied. So, I started to wonder, is this are you entering something that is actually screwing up kind of the market? Is that exasperating bubbles when you have investors whose primary reason is not to make money? That is not the driver of that reason, right? Or the utilization of even the asset. So it's like you have this totally separate incentive that is now competing with other incentives. And when you look at the commercial real estate, it's actually much bigger. But internationally, we're not the biggest. This shocked me. I thought we would be one of the largest investment where like people for real estate particularly would be bringing in capital. And we're not. In fact, other countries are a lot more. And the reason
a lot of other countries are a lot more clear cut, right? Like you could just buy a $800,000 house and you can automatically get citizenship in certain countries.
Yes, exactly. And so when looking at that, I kind of went, is that really a fear? Because I've read this a lot. It's been something that I've even thought about and that was my assumption. I thought this could really hurt the real estate market. And I don't know, after my research and everything, I think not only wouldn't be devastating or anything to real estate or our industry or market, but it actually might be better.
A little less competition with low capital too for us, AJ. You're always losing out on deals because there's other people who can find cheaper forms of capital, and you can't get much cheaper.
Don't care about returns like we have to produce.
Let's just, again, there's a lot of these things that are popping out on the administration. I just want to be, the lawyer in me wants to make sure that we are clear. The president can't do this on their own. Right? They're going to need congressional approval. If he wants to get this card through, he's going to have to go through Congress. Like Congress is the one that doesn't make. Now, he did make a funny, this is rhetorical. He made a very specific distinction. He said, this is not about getting actual citizenship, because if it was actual citizenship, then yes, we need Congress. But this is to, quote unquote, get a very strong path to citizenship. And because it's a path to citizenship versus actual citizenship, he believes he can do through an executive order. I don't think that's true. He's going to have to, get the congressional approval to do that. And like I said, Congress just passed the updates on the EB-5.
Concepts of citizenship.
Say that again?
Concepts of citizenship.
Yeah. So, and again, not to overstate that. I mean, look, bonus depreciation is the other one, right? Trump wants the bonus depreciation. That's great, but Trump doesn't get to make that rule. The Congress gets to pass it. Now, does he have influence over Congress? Of course. Does he have a Republican House? Yes. Can he exert his power? Yes. But Congress is the one that passes bonus depreciation, not the president. And so too on these immigration and citizenship policies. It's not the president does it, it's Congress.
Well, to our point, though, I don't think it's necessarily a bad idea. Like lots of other countries have it, and it's a successful program in other countries. It would be and Trump knows that it would be kind of a big surge at the beginning, and then it wouldn't be so much afterwards. So that would look good for his administration. And I don't know. I don't think there would be a ton of pushback. I think it could just get snuck into one of these big, beautiful bills and kind of get done that way.
Big, beautiful. You sound like Trump. Big, beautiful bill. Yeah. So 5 million, just to put it in context, I just did the math, or actually asked ChatGPT to do the math. $5 million times 10,000 people, which is the current EB-5 cap, is $60 billion, which is not nothing, but we spend $60 billion in about 20 minutes. It's not
let's talk about that. How many do we actually think would go through this? Because I looked it up and I was like, okay, like how much money do you think you would have to have, like net worth wise, in order to spend 5 million just on citizenship? What would you guess?
It depends on the country. Like if you live in like in China, for example, that has massive, capital controls and people just want to get out of there, you might have $10 million. Like, screw it, I'll pay half of my net worth to get a U.S. citizenship.
So just for reference, there have been a couple countries that have done away with their gold visa programs because they got pushback from I guess people in the country that the main demand for these golden visas are coming from three places: China, Saudi Arabia, and Russia. The question becomes not how many people are likely to buy it, but what's the likelihood that we can draw from those three crowds. And if Trump's implementing this, obviously he's got a lot of relationships in Saudi Arabia. We know that. He's got a lot of relationships in, I imagine, in probably China and Russia. I mean, I'm not saying that in a bad way. I mean, he's a businessman who's been like doing international business for 5 decades. So he probably has a lot of relationships. And so he could probably bring in a lot of people from these areas that other people couldn't. And so I think we actually, if Trump were to implement this, he'd probably get more people than we expect to take advantage.
Well, but like, so what would you say on average though? On average, how much, like 100 million? Like you'd have 100 million, you'd spend 5% of your entire net worth to become an American citizen?
I think, look at what happened to Dubai. I mean, Dubai, they basically built an entire economy and everything off this. I think you'll have a lot of people that I think you go to Dubai and it's basically, you're literally talking about Russians and Ukrainians and, people from Eastern Europe and everything that are fleeing, trying to get their money out, everything else. And what they will pay to get out, China, what people will pay to get out because of all those controls and everything, I think would surprise you.
Here's some quick stats. I don't know if they're accurate or not. I just pulled it up from ChatGPT, but people who have worldwide over $10 million, which means they would be willing to pay 50% of it, is at 2.8 million individuals. And once you get to $50 million, you're talking about 250,000 individuals worldwide. So
once you get to 100 million.
That we know about. Yeah.
That we know of, yes. $100 million gets you to around, what is that? Probably 50,000. Let me look up. 28,000 over 100 million.
My thing is, so when you pay, what are the questions that are asked? Dubai has a no ask policy. Like they don't ask you anything. They don't ask you where the money came from. They don't ask you nothing. Like you literally wire them or hand them a briefcase of cash and you're in. And so my question is,
why did they deny you then when you applied?
That was from how I looked. They're like, you really don't match our aesthetic here.
They have a no ginger policy.
Exactly. You don't belong in the desert, dude. Go away.
So no questions asked, and you think in the U.S. they'd be asking you all these questions?
So I'm wondering, like, what comes with that? Because it's like one thing to pay, but is there going to be anything?
I feel like there would have to be strings. You couldn't do a no questions asked.
Yeah. So what are those?
Yeah, I mean, criminal, I guess, probably.
The big question would be, do you have to, this is a key one, you brought it up, Kyle, but do they have to renounce their home country citizenship? Because that's where the skepticism comes. Because like right now, Kyle, you gave up your Canadian citizenship, right? If they now change the rules on you and say, well, now that you're U.S. citizens can't do this, you're screwed. Like you can't just suddenly go back and say, oh, wait, let me go back and become a Canadian. Or can you? Maybe
No, I can.
Yeah.
No, so that's the difference is that the U.S. is the only country that is like, oh, if you're going to be a citizen of our country, you're not allowed to be a citizen at other places. Like especially Europe. Like think about Europe. You could drive 2 hours and be in 3 different countries in certain areas. Like it's very common for people to have multiple citizenships and for those countries to recognize citizenship in the other countries. So Canada, even though I renounced my American citizenship, Canada doesn't recognize it. I was born in Canada. I grew up in Canada. I'm going to be Canadian for as long as I want to be in their eyes. So they like, if I want to like go back to Canada, they're going to take me with open arms. It's just the US that says, hey, if you're going to be an American, you can't be anywhere else.
Yeah, that's because nobody's running back to Canada. So sorry, we're done picking on Canada. We're done.
Well, speak for yourself. I'm not done picking on Canada.
Jay's like, I'm just getting started.
What if you people? I think it was one of the number one Google searches. How do I get Canadian citizenship? A couple times when there was political turmoil.
You wait a few months, and then you just you settle down in the 51st state.
So random question. If you could pick any country here that's on this list of like buying into citizenship, like who would it be? Like there's some decent countries that you could pull this off in, right? Like you can already, like I knew there was already like some, you could Portugal, Singapore, those things, but you could go like Spain, um, Latvia is beautiful in the summer.
You go buy $150,000 condo in Costa Rica, and
Here's just a short list that I'm throwing up here of some of the
Dominica, that was the other one. Yeah,
St. Kitts and Nevis, 250 grand.
All right. Okay. I was going to say, I don't have a pill really for any of them. St. Kitts and Nevis, that's different.
Cyprus is up there though. Cyprus is 2.5 million.
I think Spain. I think anything in the EU, which gets you a passport that then lets you freely move around in the EU, is probably the most valuable, right?
I know it sounds strange, but I'm looking at Latvia, and I think Latvia gets a bad rap because people mistake it for Lithuania. Latvia is part of the EU. They're on the euro, and I lived in Riga, and it was my favorite place to live. It's like,
but check out but on the right it says citizenship qualifying period. That means you got to be in there for 10 years.
Yeah, you don't get it right away.
but you can be there as long as you want during those 10 years. I think, from what I understand in that one, like there's no residency
you won't
requirement.
become an official citizen and get a passport until 10 years after being there.
Well, so Latvia is big with the Russians too. If we were talking about the Russians just trying to get citizenship other places, Russians, since it's so close, they go to Latvia, and there's actually a beach there, so they treat it as their little beach town. But anyway, yeah, I think St. Kitts and Nevis would be my my choice on that one.
Have you ever been there?
No,
Not much there. Not much going on there.
well, maybe there would be if we all decided we want to be.
My shortest, by the way,
together.
just a quick fun fact. My shortest plane ride was when long story, I won't get into it, but I basically had to fly from Nevis to St. Kitts, and I took off. You literally take off from St. Kitts. You don't even go up like 2 seconds, and then you're already starting the descent and going back down to the next. So you take off and then you land, but it's the only way to get there. Like that's the only way. It was hilarious.
Like all those puddle jumpers in like Belize and stuff. All right, I was gonna do as my top 10 the top places to get your citizenship, but I had an experience yesterday that I feel like I had to talk about, and I had to get it in somehow, and so I'm getting it in the top 10. And I just had jury selection yesterday, and I had to show up at 8 a.m. at the courthouse, and they kept me there from 8 a.m. to 7:15 p.m. And at some point, I'm going to get a check in the mail for $9 for that experience. And so Mauricio was giving shit before this about it's my civic duty to sit on a jury trial and do all these things. But all I know is the feeling in that courtroom as they were doing jury selection was everybody was holding their breath like a reverse lottery. Like you do not want to hear your name. Which got me to Googling, what are the top ways to get out of jury duty? So first of all, a lot of people just don't respond and they kind of get away with it for a while. But secondly, I do feel like I have to point out, lying under oath is perjury. So I don't condone doing any lying to get out of jury duty, but there are some legal ways to kind of get out of this. First, the easiest way you can get out is if you're self-employed, a sole proprietor, sole provider for your family, and you could bring in receipts to show all those things that having to sit through an 8-day trial in my case would be a huge economic hardship. You can get out of it. So there you go. There's an answer. Another answer is you can actually postpone multiple times in most states. Where you're doing jury duty, you can't postpone it forever. But what I've heard is if you move your date to December is by far the most delayed trials, pushed off trials and stuff. So if you push it December, your chances of going in and the trial just gets moved and you don't have to deal with it. There you go. Another one, be a student. If you are a student, especially full-time, you can get a jury duty. Next one that I wish I had known, if you take an extreme position on law enforcement, then they will most likely not pick you. So what is that? If you take either side of it. So if you say, oh, well, a police officer, because of his position, he's not going to lie. He's the most upstanding citizen you could ever have. That's the expectation. I would always take them at their word. That's an extreme position on one side, or you could take the other side that these are lying pigs and you can never trust law enforcement, what they say. They're always out for themselves. Those extreme positions, especially obviously in criminal cases, can get you out. And finally, the one that I thought was hilarious was being too smart apparently is one of the things that.
Well, you definitely don't have to worry about that one. So that was something you definitely did not have to worry about that yesterday during.
Yeah, exactly. So if you seem to know too much about the subject, especially the subject matter, the case, or just even cases in general. So I was thinking like go in there and like start citing statistics of conviction rates and things like that. They don't want you to be too smart. So you can get out of jury duty and you can hopefully not have to go through the experience that I had, because it was kind of fun. Like the camaraderie that people have all of a sudden after spending 11 hours with each other, like you're complete strangers. 120 of us were in that courtroom, complete strangers. And by that 11th hour, we were all best friends and we were cheering when the lawyers came back in. It was literally a cheering when they came back in because we knew they'd finished doing their interviews. It was kind of the ending was kind of a cool experience because you're basically delirious at that point. But anyway, those are my top 5. Maybe we'll start doing top 5s and start top 10s. I like top 5.
And it was because my mother-in-law does the whole, taking a Bible and reading the Bible when she does. Is that not on the top 5?
I didn't see that in the top 5.
No.
No, I just took this from a lawyer who does jury selection.
Yeah.
And what he goes through. Isn't there a TV show about that guy? That's what he does is jury selection. Anyway, Jay, I see you typing away. You got some hypotheticals for us?
I got one.
Jay, I have a hypothetical, but you can do yours first.
Am I doing mine first?
Yeah, you do yours first.
Okay. $10 billion.
10 what billion?
Done. I'll do it.
10 billion.
Billion. I'm in.
Do it.
I'm in.
I don't have to say it anyway.
10 billion? Wait, stop. 10 billion. You put it in treasuries and I'm making like $500 million a year.
You're going to let me finish?
Or is it 50 million? AJ's like, dude, you're not 50 whatever the number is, it's a huge number. 50 million, 5, I know, a couple of
It's 500 million.
$500 million a year in treasuries. So continue.
There's a but. So 10 billion, but you get Truman Show. You get Truman Showed.
You get Truman Showed?
Have you seen Truman Show?
Like every aspect of your life you follow?
You are on film for the world to watch. You're on TV for the world to watch 24/7 for the rest of your life.
Done. Yeah, I'll do it.
YouTubers that basically do that for a lot less than 10 billion.
Really?
Guys, you're going to watch everything. And
Yeah.
I'm totally fine with that.
Yeah.
10 billion?
I'm comfortable with almost everything in my life, and the things I'm not comfortable with, money would solve those. So
Interesting.
How do you solve
that?
the plugging?
So doesn't bother me.
The plugging. You got to plug your wife. You've got to go to the bathroom.
I feel like she'd be on board.
I'm an introvert. I don't want to be on camera 24/7. I hate that.
Well, I don't want to either, but for 10 billion, I will do. It's a job, Jay.
It's a literal full-time job for the rest of your life. Okay.
Not one that I'm going to think about. Whether other people are insulted or don't like it, that's their problem, not mine.
What if I said 100? What if I said 100 million?
No.
Okay, we got a quick no from AJ. Mauricio, let me do the math for you, Mauricio. That's 5 million a year.
Rest of your life, you have to do this?
Yeah.
No breaks.
No breaks.
Can I wear some kind of like a hoodie or something at some point so I can feel like I'm
Do I know where the cameras are?
The cameras are everywhere.
They're everywhere all the time.
It's like the Truman Show where he doesn't really know where they could be everywhere.
Are there camera people with us, or are they just all?
They're everywhere. They're everywhere. You can't escape.
I don't have to be with other people. It's just the cameras are on me.
Yep.
I would pay $5 million to do that. I would pay you to do that.
Okay.
I don't know. I might still do it. You
what's
carry
yours?
around a big cardboard box that you could just hide in your box whenever you want.
100 million is nowhere near enough for me. 10 billion? I'm
100 million because I bet my wife is not going to be on board with that. So.
Yeah.
Ooh, that's a good one.
Agreed.
That's
Okay, Kyle, what's yours?
Okay, I got a hypothetical situation that actually happened, and I thought it posed a good discussion. So in the scenario, like a grocery store, right? I brought this up before. You leave, you're in your car, and you check your receipt, and there's something on your bill that wasn't.
Right.
There's
We
something
talked about that last week, right?
Had got, but you hadn't.
We
paid
did this
for.
one last week.
We never actually talked about it on the podcast. So my question is that, first of all, where do you have to be for you to not go back in and say that you like, okay, you forgot to charge me for this. And then B, how much does it have to be? Because like, obviously, okay, if it was, one avocado that was 89 cents, like no one's going to be like, oh, you stole from the grocery store. But, what if it was a $50, I mean, how much is an entire
$200 bottle of wine? What if it was a $200 bottle of wine?
Right. And then the next question is like, okay, if you recognize it in the parking lot versus you're all the way home, like
Right.
where is the line here versus like I got this in my with my wife. Like if you're at TJ Maxx and it's a t-shirt and it's $15, but you don't notice until you get home and you go to return something, you're like, oh, they never charged me for this. Like, are you expected to drive back and say, hey, you guys
No,
screwed up?
that's where you have to be acutely aware of what the value of your time is. And so how much is the value of your time to get back in the car, go back, drive? But if it's 20 minutes and your hourly rate is $250, $500 an hour, or $1,000 an hour, it's got to be over $200-$300 or whatever the number is.
So in terms of the price, it's a bell curve for me. So if you're either extreme, cheap stuff or expensive stuff, I'm keeping it. If it's in the middle, I'm probably returning it.
You just don't value your time.
So if someone slipped in $1,000 bracelet into your or like you went to pay for it and they didn't charge you for it, and you recognized in the car that you had just walked out with $1,000 bracelet and they like rung it up, but there was a mistake and you didn't end up paying for it, you would take it back.
$1,000 is in the middle.
I think he said $10,000. If it's a
$10,000
$10,000,
is probably towards the right side of the bell curve, but still close to the middle. I'm talking $100,000. Somebody slips in a diamond, like this $100,000 gorgeous diamond.
Yeah, I'm with you on that. I would do. I think it goes back to the value of my time. How much is it going to? How much me getting back in the car or sending somebody to go back to the car to return it? How much is that?
But Jay, what if it's a small business's diamond?
Yeah, I guess that's so. I mean, the reality is, I've always taken things back. I have my, in theory, this is what I would do, but in reality,
89-cent avocado, you would go back in there and be like, hey, you didn't charge me for that.
No, I mean, so it's a Mauricio thing. At that point, it's what my time is worth. If I'm like,
I'd send my kids.
yeah. If I'm with my kids, it's a learning lesson. Hey, they gave us $1 off something they shouldn't have. Let's go back in and tell them.
I think you got to factor in who did it too. Like if it's a huge chain, I feel like that number's higher. But if it's like a small business, like even if it's $10, it's small business. I'm going back to the store.
Because like I do that with restaurant bills. Like if I notice, I always look at bills. If I see something, I will immediately say something, just because I feel like the waiter or waitress is the one that's going to get screwed on the $40 or the $10 or the $20 or whatever. So, but that's at the restaurant. If I got home and I don't know how I would realize that. I'm not going to check my receipts when I get home, but hypothetically speaking, I'm less likely to do it if I'm at the restaurant, then for sure I will do it.
I'd call it even for all the times I got screwed at the drive-thru.
Fair enough. All right. You ready for plugs?
Wait, before we end, I want to float a theory. Do you mind, Kyle? Do you mind if
Go for it, man. I'd love to hear an AJ theory.
Breaking news. This is the first, by the way. AJ to float some theory at the end of the podcast. This is the first. Let's listen in. Let's lean in.
All right. I heard a crazy theory, and the reason why I think about it is because we were talking about it and Jay asked. So there's a theory going on, which I thought that's interesting. Trump intentionally wants the economy to go down. And the reason why is because in the next 6 months, we have to refinance $7 trillion, yet the Fed won't lower rates. And so he's literally trying to get the Fed.
That's why I said, does he care more about the stock market or the 10-year?
I could think of a half dozen reasons why he'd want the stock market to go down. Some of them are reasonable reasons that are for the good of the country. Some of them are unreasonable.
Well, not only
reasons.
that, if this is
interesting. Think about that. $7 trillion. What is the value to taxpayers? Like, honestly, what is the value to taxpayers to contract the economy when we know the economy will contract? It doesn't.
But AJ, not only that, if he does it right away, he can partially blame it on the previous administration too, right? Like this was coming. This is not me.
It's coming. It wasn't me.
Here's the problem with that theory, AJ. It seems to work if you don't give it too much thought, but then when you really think about the mechanics, if the recession is localized to the US, it's not a global recession, then what happens is our treasuries fall below the treasuries of other countries. There's not going to be enough demand at the low treasury rates when people can get a risk-free rate in another currency that's paying a decent size more. And
Japan just lowered their GDP to the lowest level in 20 years.
In the last 100 years, has there ever been a localized recession?
If the United States contracts, we will take everyone down.
The only time that I think this really would have worked was COVID, when the entire world, I mean, we could have gotten away with selling 100-year bonds at 0% back in 2020. We should have. We absolutely should have.
But why? The United States will lower interest rates if they want. Why would that matter?
We got a lot of cushion though, too, don't we? Like, I'm just talking about like high demand bonds from like reputable countries. Like you could obviously go to Argentina and get crazy numbers, but like for reputable countries, like we still got like 2 or 3% cushion, don't we?
And two, if we're going to do it, then guess what? Just put 25% tariffs on everyone, and literally the entire world's economy will come to a screeching halt.
It's crazy like a fox right there.
So if you're sitting here, and this is why it interested me, what is the, like, for us as taxpayers, for the United States government, to have to, at the highest interest rates we've ever seen in a generation plus, $7 trillion, looking at what that does then for the foreseeable future to taxpayers' money, what we have to pay. What is the value to our country to not pay, double the interest rate on $7 trillion? It's an interesting theory.
I don't mind it.
Because at first I'm like, that's stupid. But then you actually do the numbers. That is an astronomical sum for the foreseeable future that our taxpayers, we have to all now pay, because we just racked up $7 trillion that we have to refinance at the highest interest rates ever. We're talking about our yearly budget being so just burdened in debt payments. It's interesting.
Well, that was when I wrote that in our text thread, that was one of the 3 rationales I could imagine for the situation of intentionally trying to soften the economy.
AJ, you show me 2% 10-year treasuries and gets me a little excited. Makes me want to plug my wife right now. Badass Investor. Go check her out on her socials. Instagram, Badass Investor. YouTube, Badass Investor. That's my plug. What do you got, Mauricio?
How come you got to plug Ashley first?
Because I thought it was a good segue of me being really excited.
We did our official launch on Thursday for the Elite Syndicated Program, a little mentorship, weekly calls. Just go to coachingwithmauricio.com if you want to have access to me. Ask all your questions on a weekly basis. Coachingwithmauricio.com. I'll send you some info and we'll see if it's a fit.
When are you releasing Mind the Gap, Mauricio?
The syndicator, I'm going to do a poll because you guys gave me some feedback. The syndicator blind spot, the capital raising blind spot, I don't know, or forget the blind spot altogether. I don't know.
I said Mind the Gap, but
Mind the Gap. Is that what Badass Investor tells you all the time?
No, she's actually pretty good at that. You should probably ask her. She's got really good ideas and company names and stuff like that. Conference Connect, great name, catchy. Jay, what do you got for plugs?
So we are actually, at least temporarily, shutting the doors on our coaching program, our multifamily training program, because we're full. We've gotten to the point where we want to be able to give enough attention to the students that are in the program. So by the time this comes out, our doors will be closed. So don't even bother reaching out to me. The answer is going to be no. So we need to plug somebody else's coaching, and I'm going to go with let's see, eeny, meeny, my Mauricio.
Oh.
Coachingwithmauricio.com.
Let's be honest, Jay. If they listen to our podcast and they want to get in, well, you got to let them in, right?
Reach out to me. Maybe I'll do something. Maybe I'll do something special.
I think if you need to get in there, I'm sure that for drunk real estate listeners, you will make an exception.
If you're listening to an hour 25 minutes into this podcast, I might
That's
make an
kind of what
exception
I'm
for
getting
you.
at. Like you want smart people who are, pay attention in your programs because they actually do things and they make you look good. So if anyone's, I think we would still let them in. AJ, what do you got, buddy?
Check out the YouTube. Plugging that again because team's working hard on it, making changes, trying to make it good, doing a good job. So reward the team,
including producer Alex, right?
Alex she's the one doing it. She's heading it up and she's killing it. She's doing a really good job. I mean, the way she's doing, she's trying all sorts of stuff and she's doing a great job.
Have you thought about a bonus? Have you thought about a bonus at all? A bonus structure involving Aston Martins, stuff like that? Yeah. I just throw that out there.
As Mauricio was looking up the cheapest Aston Martin you could find. You got to make it Ernie worthwhile too, right? It's a tax write-off if it's used for all of this content and stuff. Exactly. You ever think of what kind of voice Ernie would have if he was talking on your podcast?
I have. That's probably pretty close.
I don't know. I think he would kind of have a high pitched. I think he'd be a high pitched guy.
Maybe a deeper.
Do we even know if Ernie's a guy?
Rustling. Yes, he's a male because of his horns.
Yeah, the horn does it for you. All right, let's wrap this up. We're all back next week, right? But we're taping a day early.
Nope.
What?
I thought you're not here next week.
No, it's in 2 weeks.
No, it's in 2 weeks.
2 weeks. Yeah, next week.
We're all here next week. Sweet.
Yeah.
2 weeks, we got a special guest. But next week, we're all back together. We're taping a day early, but we're still releasing Thursday, as always. So same bat time, same bat channel. So for everybody, I will see you next Thursday.